Welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 25th of August 2010, and the week so far, well, it's been another quiet week, relatively speaking, with non-conviction in the markets continuing. The markets have turned a bit more bearish at the moment due to the negative figures we've had during the earlier part of this week. For example, we had the Eurozone PMI come out on Monday, which was lower, and just recently, yesterday, we had US housing figures come out, which were 15-year lows. Now all that is feeding into the negative bearish sentiment, and it is leading to the markets actually coming off at the moment. Equally as topical has been the fact that yields in many of the bond markets in key countries around the world, the United States, Japan, UK, Switzerland, are now actually at record lows. So looking at the situation as it currently stands, the FTSE is currently trading 150-155. The 200-day moving average continues to act as a weight over the price of the FTSE, and is helping to push the FTSE down at the moment. As it currently stands, we are smack in the middle of a well-established range for the FTSE between 4,800 and 5,400, and that doesn't look like it's going to be changing anytime soon. If anything, it would be wise to actually wait for the market to hit one of the extremities before either buying or selling. The FX markets at the moment again seem to be pretty much sideways. Sterling dollar at the moment is trading on 154.30. It has broken on the downside through its recently established uptrend, which it had established back in June. It's currently trading around 154.30. If the downtrend currently continues, you're looking at support around 151.70 or so before it stabilizes. More topical has been the fact that Japanese yen is now at 15-year lows. Just recently hit a low of 83.50 yesterday and has bounced back off that since. However, it remains in a strong downtrend at the moment, and certainly looks like it could go down all the way back to about 80.00, a level it last hit back in April to 1995 before it actually bounced. It does look like a level where certain major players might actually come into the market and help move that market around, particularly the Bank of Japan, considering that Japan is very strongly dependent on its exports, and a strengthening yen has quite a strong adverse impact on many of its exporting companies. Gold too is currently on the rise. It's trading around 1232. It hasn't broken the uptrend it established back in July, and it looks like that won't change anytime soon. As I mentioned in one of my previous commentaries, it did form a bullish wedge. If anything, it looks like it could try and test the all-time highs of around 1265. At the moment, it continues to grind higher. Despite the fact it has spiked lower in the last few days, it nevertheless closed higher than its uptrend line, and looks like it could be going higher from here. Oil, on the other hand, has fallen to the lower range of its $70 to $80 range, a well-established level trading range for oil as well. Again, this is off the back of the negative economic outlook that we're having around the world, and off the back of the fact that we are getting quite a lot of negative news coming out of many countries around the world. We are expecting oil inventories to come out later on today. We had record stockpiles of oil announced last week, which was one of the reasons why we had quite a strong sell-off. However, if we get another figure similar to what we had last week, we'll possibly see oil continue to sell off. However, if we find a more stable figure, this could certainly be the bottom of the $70 to $80 range. As mentioned, it could certainly possibly provide a buying opportunity. So looking at the week going forward, we have a number of key figures coming out in the next few days or so, which could certainly move the markets. The first, as I mentioned, will be oil inventories coming out later on today. What will be as closely watched will be the GDP figures both at the UK and the United States on Friday. Now, for the United States, we're expecting a possible downgrade in their GDP. Now, this will all continue to feed into the negative sentiment we are having at the moment in the global markets, and could possibly lead to a further sell-off. It will be closely watched. Equally importantly, on Monday we have the PCE deflator coming out of the United States, a measure of inflation. Now, given the record low yields that we're having in many of the bond markets, including the United States, this figure will be closely watched to see whether inflation will remain, and it will give an indication as to which way interest rates will go going forward. In terms of client activity, many of our clients continue to fade many of the markets. So as it currently stands, they continue to buy into the falls we've had in the equity index markets. So they're long the Dow, the S&P, the FTSE and the DAX. They continue to hold long positions in gold and oil, as I mentioned in many of our previous posts. They're positions that they've had for a long period of time, and any sell-off seems to be considered as a buying opportunity for many of our clients. They have obviously also started buying into the dollar-yen fall that we've had recently, believing that it may possibly be overdone. In terms of the theme of the week, I think the theme of the week would be a continuation of the theme I've mentioned over the last number of weeks, simply because it's the way things currently stand, and that really is the fact that there is a lot of non-conviction and a lack of clear direction in which way the financial markets will go. We are currently in a bearish phase. However, it was only just a week ago where everything seemed to be rallying and we looked like we were out of the worst. I think at the moment it would make sense to actually just wait and see where the financial markets go and where the economic data is going forward, especially since we have a number of key figures coming out later on in the week, including the non-farm payroll figure, which will be coming out a week on Friday. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.